Imagine you've maxed out every credit card you own. Normally, this would be the end of the road, financial ruin. But instead of panicking, you open a bank in your basement, print your own currency, and lend it to yourself to pay off the cards. To any ordinary person, this is madness. In the world of global finance, however, this is called the bond trick, and it is the hidden engine driving the United States economy. This isn't just a clever accounting hack, it is the foundation of the modern world. But every illusion has its limits. Today, we are going to deconstruct how the US buys its own debt, why the world lets them get away with it, and what happens when the trust finally runs out. To understand the trick, you have to understand the bond. At its core, a government bond is nothing more than a glorified IOU. When the US Treasury needs more money than it collects in taxes, which is almost every single year, it issues these pieces of paper. They tell the buyer, "Give us your cash now, and we promise to pay you back later with interest." For over 200 years, these bonds were considered the risk-free asset. Why? Because they were backed by the full faith and credit of the U.S. government. This system dates back to Alexander Hamilton, who realized that if the young nation proved it could pay its debts, it could borrow forever. It was a cycle of borrowing to pay off old debts and issuing new ones to fund the future. Two dates changed everything. In 1913, the Federal Reserve was created. It was meant to be a lender of last resort to stop bank panics, but it quickly became the government's ultimate partner in crime. During World War II, the Fed realized it could keep the government's borrowing costs artificially low by simply buying bonds whenever the market wouldn't. Then came 1971. President Richard Nixon shocked the world by ending the gold standard. Suddenly, the dollar wasn't tied to anything physical. It was pure paper, backed only by trust. This allowed the U.S. to print and borrow without the physical constraint of gold. The bond trick was no longer limited by how much gold was in the vault. It was only limited by the world's willingness to believe in the dollar. Here is how the modern version of the trick plays out. The Treasury holds an auction to sell bonds to cover the government's massive deficit. Normally, China, Japan, and big pension funds buy them. But when the debt gets too high or the interest rates get too expensive, the Federal Reserve steps in. The Fed doesn't use tax money. It uses digital alchemy. It types numbers into a computer, creates trillions of dollars out of thin air, and uses that new money to buy the Treasury's bonds. The government gets the money to spend on wars, stimulus checks, and infrastructure, and the Fed gets a bond on its balance sheet. It is a closed loop where the U.S. is effectively lending money to itself. This reached an astronomical scale during the 2008 crash and the 2020 pandemic. Politicians love the bond trick because it feels like free money. They don't have to raise your taxes to spend trillions. But there is no such thing as a free lunch. The cost is paid through the hidden tax of inflation. When the Fed creates new money to buy bonds, it increases the total supply of dollars. Since there are more dollars chasing the same amount of goods and services, the value of each individual dollar drops. This is why your groceries are more expensive, why housing is unaffordable, and why your savings account buys less every year. Inflation is a quiet transfer of wealth from people who work for wages and hold cash to the elites who own assets like stocks and real estate, which rise in price when the money printer is running. The U.S. is now addicted to this debt. With over $34 trillion in national debt, there is no way to pay it back through taxes alone. The system requires constant new borrowing, just to pay interest on the old borrowing. But the world is starting to notice. Major buyers like China and Japan have been reducing their holdings of U.S. treasuries. Countries in the BRICS bloc are actively looking for ways to bypass the dollar in global trade. If the rest of the world stops buying U.S. debt, the Fed will have to buy even more of it. This creates a death spiral. More money printing leads to more inflation, which leads to less trust, which leads to more money printing. This is exactly how empires of the past, like the British and the French, saw their global dominance evaporate. The bond trick isn't a partisan issue. It's a structural reality of the modern empire. It will continue as long as the world trusts the dollar. But as history shows us, trust is a fragile thing. When the illusion finally cracks, it won't be the bankers or the politicians who suffer most. It will be ordinary people whose life savings are tied to the currency. Financial education is your only defense. Understand that inflation is a policy, not an accident. Look for assets that hold value outside of the paper system, because when the world's biggest financial trick finally ends, you don't want to be the one holding the bag.